All right, everyone. I wanted to update you on our view here on Chinese equities. This is all done through the KWEB ETF. As you may have read, and I talked about this last week in one of our public videos as well, that we do think there's more upside here for Chinese equities. Remember, the backdrop is really quite simple. China basically went from a zero COVID policy to a just throwing it all out the window basically in a matter of just a short couple of weeks. Um, and we think there's potential for that reopening trade essentially that we saw taking place here in the United States and in Europe as the economies reopened after COVID. So KWEB is the ETF on your screen. From a trend following perspective, we have this trend following algorithm called the market rover. You can see how it went from a bullish trend to neutral, which means stay out, to a bearish trend, which is the red background color, and it's now back into a neutral. This is kind of like that intermediate or intermittent phase before it can go back into a bullish trend. More aggressive investors can probably get long KWEB here. But for those people that like to wait for a trend to emerge, that's something a bit more stable. Want to wait a bit longer here. Again, these are the much longer term trends. These are like the multi-year kind of trends. From a more near-term perspective, I'm going to call it a trading perspective, I wouldn't have too much difficulty imagining KWEB at these levels, bumping up another, 10, 15%. That's not such a big move for this thing. So anywhere towards, the very high 30s into the very low 40s, or high 30s towards 40 is possible. Again, if the Chinese economy really is reopening, if they're not going to shut it back down, if COVID cases spike, which they seem to be, then this is possibly something that could be a next good trend. Again, we're just watching this, and I wanted to update you as we go along. Hope it helps, and we will see you guys this week in our favorite trade of 2023 trade idea research call. You can sign up for that down below or on the next screen. Be sure you join us there. It's going to be a tremendous insight into our favorite or best reward to risk situation that we see right now in the markets. And it's probably not where you think it is. We'll see you there.